Meanwhile, as South Africans, we should brace for an interest rate hike by the middle of this year, possibly that sooner than most economists had previously expected. The fading benefits of low oil prices and a weakening rand are seen to be stoking inflation in coming months.
2015 had started positively on the inflation front. The Reserve Bank lowered its inflation outlook substantially in January as oil prices slumped to around $45 a barrel. Banking group Investec now expects the central bank to revise its inflation expectations higher. That's on the back of an increase in oil prices in recent weeks and a sharply weaker rand. The bank also expects interest rates to go up by another 25 basis points as early as July, soon after a rate hike in the United States of America in June.
In 2016, inflation is expected to be above 5% and indeed approaching the upper limit of the inflation target band. So that's one reason the Reserve Bank would consider an interest rate hike this year. Another reason will be the United States economy is expected to raise its interest rates from as early as June. And obviously, as it increases its interest rates, South Africa does tend to follow. So we would expect to see potentially also a 25 basis point hike in interest rates in the second half of this year.
Another banking group, Absa Capital, expects the rate hike in September or November, but it says the oil price will average around $50 a barrel this year. That's expected to keep the petrol price at around 11 rand 94 cents compared to 13 rand 62 cents last year. The bank says this will add about 13 billion rands in consumers' pockets and lessen the impact of higher interest rates.
We've also had a bit of a holiday on the unemployment insurance fund contributions worth 15 billion rand. Half of that will go to the consumers, but again, only the people with jobs who are paying into the UIF fund. So I'd say there's some relief for consumers at the upper end of the income spectrum, but for those unfortunate consumers at the bottom end of the income spectrum, and particularly those who may not have employment, I think times remain quite tough for them.
Both Investec and Absa expect the economy to grow at around 2% this year, but they say electricity shortages and possible strikes in key economic sectors could choke growth further. Luta Motlogelwa, SABC News, Johannesburg.